What up, everyone? Welcome back to Financial Education and Business. Today, I'm going to be covering TE Finance, and this company is one I've been looking at closely, and I think there is potential here. And in this episode, I'm just going to be going over the numbers, the history of the company, leadership, and the type of company, what they do. Um, I'm sure maybe you've heard of them, you haven't heard of them, but they are specifically in the energy industry. Um, they focus on building solar, uh, and they are specifically trying to be one of the most like efficient companies. I've talked about them before, but today I'm going to be solely focused on them. So T1 Energy, their ticker symbol TE. The company's small cap, so it's about $2.4 billion market cap. Obviously, has gone up significantly. The company has grown a lot. And one of the reasons that is this market, the market cap has grown is Leopold, so far one of my favorite investors, has bought shares in this company. He's bought significant amount of shares, and so because like his past purchases or investment in stocks has just been like on the dot, and then his AI thesis has been on the top, on the mark. So that is why uh, you know people kind of follow what he does. And so like I do kind of track what Leopold does, and he's the one that wrote situational awareness. And so what we're gonna do in this video is just take kind of his thesis of what he thinks is gonna happen, and just more like look at the company and where they're trying to go. So yeah, it's about $2.4 billion market cap company, so still very small market cap. Um, they are revenue 879, so the revenue has grown significantly. Net income, as you can see, they've lost $385 million. Why? This is the main reason is this is a small company trying to compete in the solar industry business, but the problem is that it's going to take a lot of capital, and because they're so small, there's going to be a lot of volatility until the company can prove that they can actually make that money. And so if we were to look at the stock here, we've gone, let's go 1 year, I guess. um, the stock has gone from $1.40, now sitting at $8.53. So it's gone up significantly, over 546% in one single year. But just because it went up that much, it doesn't mean the company's over with and done. I think there's still more growth if the company continues to make these promises and they actually fulfill and continue to develop new technologies and being one of the greatest solar manufacturing companies out there. So analyst ratings. So we can let's quickly look at analyst ratings and see what they are saying here. So the analysts here, or unknown analysts, hold. There's a couple of analysts here saying it's a buy at $10, and some are saying it's a buy at 7, price target 10, and definitely it's above a lot of these targets, but it's still below some of these targets. So the highest one is Gus, who is saying it should be a $16 stock. Um, Again, analysts are analysts, and they can only make guesstimates. Um, so as you can see here is a strong buy, and the number of analysts over time. So looking at January 2025 to current, the number of analysts, strong buys has stayed consistent. We have one more individual that stepped in and saying, hey, this is a strong buy, and that continues to go up, which is good to see. More analysts are looking at this company and giving it a rating. Most likely, this could be this June 16th guy who came in, and the number of analysts, as you can see, has been 5, and then all of a sudden in June it went up to 7. So we got 2 more analysts coming in looking at the company. Let's go look at the financials, right? Actually, let's look at maybe the website and see what the company does, and then we will go to their social media page and look there as well. So this is the company's website. So as you can see, they advertise solar, and this is essentially what they focus on: developing solar for the masses. Um, and what they want to do is they have these factories. Maybe I can even maximize this video here and we can talk about it while it plays. Um, Let me put this on 2 speed, make it a little faster, 1.5. So as you can see, the company is mainly focused on building the solar panels and building it from top down and using machines in this huge factory to be able to build these solar panels without, let me make myself a little smaller here so I'm not in the way. Geez, somebody say something. Okay, there I am. They want to be able to make these solar panels with you using this warehouse and be able to build them autonomously with the least amount of human interaction as possible. And so because they're building them autonomously, they're able to just crank out thousands of these solar panels that can be used for data centers, homes, so on and so forth, for whatever case that people use solar panels for. And as we are going into especially the AI industry, it is evident that we need more energy, and a lot of time is these types of energy that people don't really consider how solar can play a significant role here on Earth, and especially on the moon and solar system, as these rockets are being sent up to the moon recently. We've seen a lot of interest in using solar to actually harness a lot of the energy there. Um, and so this solar has been, a proven source of energy. So I think whatever company, like for example in China, they have massive solar fields that they're able to use to actually stay ahead of the United States in power production. And so that means they don't rely as much on um, fossil fuels, oil and gas, and so they're able to use whatever the natural energy that's coming from the sun. So this is essentially what the company is trying to do, is become the United States like huge solar panel manufacturing company. They're still small, they're still growing, but they are, one thing that they make evident is that they are America first, and they want to be seen as the closest ally to the United States and want to be the biggest solar manufacturing company. They give updates on their production, and these are the kind of things that as investors you want to see, is a company promises on, hey, we're going to build something, and you actually see construction things actually happening. And so over time you're going to see this construction get done. And once again, this is going to be exactly what we see in this video, which is going to allow them to build a factory that they can crank out thousands, hundreds of thousands of solar panels, which is pretty awesome. um, Okay, now that we've seen that, let me just put this to the side that we kind of know what they do. Let's look at these guys. What do these guys do? All right. So I kind of just asked AI, like, hey, tell me about these guys. What do they do? What's their experience? So I said, hey, tell me what the executive team is and what they've done in the past. So just looking at them, a business is a really good business if there is really amazing leadership. And so in this case, I think we have a decent leadership and experience in the industry, from past experience in the industry. So you got the Chief Executive Officer, so the CEO chairman. He has worked on Energy LLC, Alusa Energy LLC, founder and CEO. There you go. Alusa Energy Acquisition Corp, founder and CEO, president, director. Moore Capital Management, director of research and portfolio manager. Loom Brothers, equity research analyst. Bank of America, Renaissance, all these different experiences. I'm not going to read through all of these, but this person has had, roles. The CEO and chairman has had amazing roles as a CEO, as a like markets research, equity research analyst forever. He's worked at Bank of America during the 2008 crisis, tech yeah 2008 crisis that we had. And then we have this guy here, Evan Callio, I guess, Chief Financial Officer. It looks like he had experience working at BTIG, Managing Director, Energy and Infrastructure Investment Banking, Morgan Stanley, Managing Director, Equity Research, 14 years of experience there, and JP Morgan, Energy Specialty Sales, Morgan Stanley, Investment Banking. As you can see, the CFO has had good experience. And what is the job of the CFO? To do some financial engineering to allow the company to grow to whatever it needs to grow to. And that, not bad financial engineering, but to be able to take advantage of the finances and find opportunities out there, inefficiencies, to be able to raise capital to grow the company. And the most amazing part is, as we're talking about, like, the experiences that these guys have had at these companies, those are the number of connections that they have at those companies. And so they're able to maybe hit up some guy at Renaissance Capital or JP Morgan and say, hey, yo, we have a deal for you, so on and so forth. So it's good that a lot of these guys have had experience in the energy sector, as well as like in banking and equity research analyst positions. Jamie, he's a chief operating officer. It looks like he's worked at More Advisors, founder and managing partner. Uh, Stagecoach Renewable, co-founder and chief commercial officer. So maybe this is a T1 Energy appoints. So here's his appointment, which is kind of interesting to see what he does. T1 Energy announces Jamie Eduardo Gully, 56, was appointed by Chief Operating Officer in August. Previously served as the company's Executive Vice President of Corporate Development since. Okay, get out of here. Previously, he co-founded and served as CEO of CEO at Stagecoach Renewables, a company backed by Apollo Global Management focused on acquiring renewable royalties. Additionally, so it looks like, yeah, so renewable royalties, I don't know exactly what that is, but it looks like he may have worked on some kind of like renewable related business. Anyways, so let's keep on going and learning about these the leadership at T1. Jamie, that we kind of looked at this guy here. Um, he has so Bitmore Advisors, founder and managing. He worked as co-founder and chief commercial officers here. Stagecoach Renewable, Macquarie Capital, Global Energy Equities, um, Carroll, Blue Wave, hedge fund portfolio manager in energy. I mean, as you can see, these guys have decent experience. And finally, and something else I'm realizing is a lot of these guys are actually young. They're not like, and that means a lot more energy and being able to stay up late nights when things get tough, which is really awesome. Um, Andreas Bentzen. So Andreas Bentzen, Chief Technology Officer, co-founder and CTO, 6 year, Otovo, um, FREYR Battery, EV Technology, Chief Technology role, um, REC Group, REC Technologies US, Vice President of Technology, multiple technology roles from 2005 to 2011, NoFast AS, Technology and Management Consultation. So he has some technology experience. It doesn't seem too extensive, but more than 6 years here at Tobo. It looks like he's, founder. A lot of these guys are founders. So maybe, when they're looking at small company like this and they're trying to grow it, they're gonna have that um, founder mentality. So which is really good to see. And then finally we got this Andy Munero. Um, Andy Munero, where you at? Jeffrey, Andy Munero, Chief Legal Policy. So Solar Cycle and Manufacturing, Solar Cycle Chief Legal Operation Officer, Solar Cell Module Manufacturing, Solar. Okay, so he has experience in legal related and solar manufacturing development uh, roles in multiple different companies, which is really awesome to see. Uh, I don't know where Jeffrey Spittle is. Do we? Oh, right here. VP, our relationship manager, senior management director, energy, IR, investor relations. Um, but overall, like we're interested in these guys that are, playing a key role, including the CEO, who has a lot of experience and it seemed like he's at least spent a lot of time in the energy industry. Um, so from a leadership perspective, company is pretty solid. You can have a great company, bad leadership is going to destroy it. And these guys definitely are well networked to know people in the industry. Now let's look at their Q1 2026 earning call. I mean, this is what they kind of reported. Um, all right, let me just zoom in. So these are prepared remarks. The CEO, the CFO, the CFO, and so on, and the COO are all gonna, give some kind of commentary on the call, which would be good to listen to. But right now, T1 Energy, they have a Texas, a fact a running factory in Texas, which is called G1 right here. So T1 continues to qualify international cell supplier to support their higher end of the target 2026 G1 Dallas production range of 3.1 to 4.2 gigawatts. So they are building these solar panels and they're selling it, and obviously that's how you make revenue. But also they are opening up, as you can see, the construction on the G2 Austin construction proceeding on schedule with foundation concrete works underway on April 26th, and then it's going to be stood up on the steel. They're going to stand up steel expected by May of 2026. And they have, remember we saw that video, they have put up some steel. T1 has identified and is targeting comprehensive financial solutions, which includes significant debt components. Once again, small companies, this is how they grow. They issue debt or they issue equity to be able to raise money and to keep growing the company. And then they're raising debt and they're raising capital to be able to finish up the phase 1 of G2 Austin by Q2 of 2026. T1 Energy record quarterly net income from continued operation of 3.9 million, about a 1 cent per share. A record quarterly adjusted EBITDA $9.1 in Q1 of 2026. T1 continues to qualify international cell suppliers to support their higher end target, and be able to hit these targets by the end of the year. And then we have, as a major buyer of American polysilicon and growing American advanced manufacturing, building critical domestic energy supply chain. And this is their biggest role, is that they want to be the number one domestic supply chain, be able to build networks across the United States to be able to manufacture solar panels through a supply chain that's 100% from the United States and not outside of the United States. So that they believe T1 is well positioned for potential Section 232 ruling, and I believe this ruling is related to the tariffs around solar. So section ruling mentioned the T1 Energy Investor Relations reference U.S. Department of Commerce trade law determination under section 232 of the Trade Expansion Act of 1962. The status authorizes federal government to investigate whether an import of certain goods threaten national security, and if so, to recommend tariffs or other restrictions. So essentially, they believe they're going to benefit because the United States is going to essentially either raise tariffs on companies that are getting their supply chain outside of the United States, and that means most likely China. And these guys are building the supply chain here in the United States, which gives them that benefit. And usually, if the United States is cutting off supply chain outside of the United States, there's going to be funding for this. So they're going to say, hey, listen, if you're doing this here in the United States, here's some money or tax benefits. So anyways, going on to the G2 Austin, it looks like Q2 concrete work begins and so on. They're starting to build. Q4 of 2026, PLE installation starts and final commissioning and start of operation. They think they can finish it Q1 of 2027. That is the target. Right now we are sitting, Q3 PLE enters U.S. ports, roof, and this is as of Q1, so as of May 12th, and they're kind of giving this update. So we're probably somewhere around here, and they're giving live updates. So this is really good to see because, oh, right here, we're here. This is really good to see because we can judge them on every single earning call and say, guys, where the heck are you at? So this is their main factory right now where they're producing most of their products, and this is a quick update, I guess. So they're executing against 3 gigawatt of concrete in 2026. Wow, I said concrete. Executing against the 3 gigawatt of contracts in 2026. Production status, so produced 683.3 megawatts of solar modules in Q1 of 2026. That's a lot. In April, G1 Dallas produced at G1 Dallas production at 3.4 gigawatts annualized rate. So per year. Sales update. So T1 Energy Q1 26 total net sales is about 177.6 million versus their 53 million Q1 of 2025. So essentially, year over year, this company has 3x'd. I think this might be a little bit better to see, kind of conveying the same information. So this is production and then outbound. So they produce and they sold. Their production is high. They're producing more than they're actually shipping out. I believe that's what it is. So here you go. They're producing a ton. They have some in inventory. They're able to ship out a ton. I guess they are selling it to their client. So their outlook, they think they're going to continue the 3 gigawatt of firm contracts for 26. Their cell production, they're going to try to hit the their guidance of 3.1 to 4.2 gigawatt range for 26, with volume weighted to about, I guess, halfway through 2026. T1 Energy, so so summary of the financials. So cash equivalent, so short-term assets, other current assets. Boom, it looks like they have approximately as of 31st March, as of December. So it looks like in that quarter they went and reduced the number of cash on hand, and they increased other current assets. Net property, so long-term assets, other assets, they also increase their long-term assets, but other assets stay kind of consistent. Nothing really significant here. Total assets, they went from 1.372 to 1.337. Liabilities, and once again, long-term assets to liabilities is almost 1-to-1, so nothing too crazy to see here. essentially saying like they're not too leveraged. They're able to cover short-term liabilities. They're able to cover long-term liabilities decently. 456, maybe they have a little bit more. No, yeah, they're able to cover short-term assets, short-term liabilities, and long-term liabilities just fine. Um, do do do. So production guidance, market outlook. So they believe that the market outlook around it, they focus on the Section 232 outcome. They believe that's going to give them some potential benefits. Third-party cell available above. So they're seeing a potential ruling of this section case. Third-party cell availability above the 4.2 gigawatt customer demand for merchants volumes post-July safe harbor milestone are still unknown, so this is more of a risk. But if the U.S. does pass it, and they're gonna definitely benefit, and a lot of other solar companies. Once again, this is a very small company, and can be very very volatile. I think a beta of over 2. But as we saw, their management team is pretty impressive, and I think if with the relationship they've built throughout their career, I think they're going to be able to execute. And they're not, they're still, mid 30s, mid 40s and 50s. They still have a lot of energy to able to go through go through some rough times and have the energy to stay up late nights, or the energy to go to different locations and make those connections and the relationships. Finally, I think we've kind of looked here let's look at the financials. um, let's look at it quarterly. All right, so this is a company here, Q4 24, they're making about 3 million, about 3 million quarterly. And then let's just continue to grow their revenues. And this is what you want to see with a small company is, are they growing revenues? If they're growing revenues, it means they're either selling more products to existing customers or selling to new customers, or a combination of both. So this is really good to see. Cost of revenue, obviously as you sell more, it's going to cost you more. Gross profit, they have gone into the negatives at Q4, right? That's what it says. Yeah, Q4, because of cost of revenue has gone up significantly from about 200 million to 374 million. Selling general, probably this is around marketing and so on. So selling general administration is an operating expense. It involves various components of expense that are not related to production. So selling, general administration, advertising, keeping the paying the lease on the building, all that. So this is obviously growing, but somewhat consistent. So nothing to worry about here on the other expenses. Total operating expense, it's nothing too crazy. Total operating expense, the company is growing. Their operating expense is expected to grow. Operating income, so this company used to have less losses, but these losses are comparably good uh, when you look at the amount of revenue the company is making. So they're making a ton of money, and then their operating income is still in the negative, but it's not significantly crazy. So once again, this is a startup that not expected to be making money yet, at least. Eventually they will. Um, let's go back and look something about the net income, right, to common shareholders. And once again, we can judge this and say, hey, this company is burning up money. Well, are they burning that money, or are they growing growing the business by all these different types of expenses that they have as a business? So overall, the company is definitely um, you know spending a lot of money, taking major losses at the net income level. But this is because you're growing as a small business. You may, especially when you're building a second factory in Texas, well, you're going to need money. And so your expenses may grow. Move on, and let's look at this shares outstanding. So essentially, we're seeing this dilution. So what this means is the company is raising money, and we talked about it. For smaller companies to grow, there's two ways. One, they can raise money through debt, and they can raise money through issuance of more stock to the marketplace. And so when they do that, they kind of dilute shareholders. And as you can see, they're about 11% the past couple of quarters, and they kind of gone up a little faster here. They went 161 million shares to 218 million shares. So they're issuing essentially more shares and diluting shareholders. But if that money is going to the right place, the company is growing. For the growth of the company, that is, not anything that really needs to. That is not something that investors should be concerned with. Now, if we see them raising money and actually not seeing any success, then investors can be a little worried about. But we are seeing evidence that they are building the second factory. Looking here, cash, and we looked at their short-term, current, long-term liability. But if we look at it, um, in a expanded quarter-over-quarter version, we're seeing that this company is growing. It kind of stayed a little consistent and maybe even down here, but it increased from here to here, Q1, Q3, or Q2 of 2025. Overall, if you look at the trend, the company is growing. They're growing the cash, total current cash position. So total current assets, total liabilities, current liabilities. So if we were to look at this, ooh, that looks terrible. If we look at this and compare it to their total current liabilities, as you can see, their current liabilities is going up, but not exceeding, their current assets. So their current asset to liability ratio is pretty good. So they're not over leveraged, which is totally an awesome situation for a small company to be in. Because when it comes to tough times, sometimes you need that money to be able to cover whatever kind of liability. Total assets, as you can see, total assets over 644 million. Liabilities, as you can see, are also kind of growing. They went from 8170 to about a billion in liabilities. But total assets, as you can see, they have 1.3 in assets. So they're able to liquidate long-term assets to be able to cover some long-term liabilities. Well, some liabilities, so which is not that big of an issue. They are what else? Accounts payable. They have accounts payable here, and this is accounts payable is the amount that the company owes to vendors and suppliers, and this is growing, but that's not too bad at all. And this is they have the current portion of long-term debt that they're paying off, and then unrealized revenue. This is more of a liability. They still have to perform the service, but however, they have taken in some of that revenue which were received in current portion. Other current liabilities are all current liabilities that do not fit into the categories above. Not useful at all. So from a current asset to long-term asset to current liabilities to long-term liability, company's pretty healthy. If we were to look at debt, right? If we look at the net debt, so debt minus, so the total cash minus debt, they were, despite going down here in 2024, the company wasn't public yet. But once they went public here, this company, amount of cash versus debt has definitely improved significantly. They went from 691 in debt, slowly improving, I mean, significantly making a big jump here in improvement. So this is the company's debt um, versus cash versus debt. So it's definitely doing much better than it has in the past. Um, so here it is. So total cash minus their debt. So to be honest, I'll say their financials is not bad, and it leaves them a lot of room to keep growing the company without having to be over leveraged, and also awesome leadership, still young enough, and full of energy to lead the company in a strong way. And so you can go to their website, read a little bit more. Each one has, really good experience in working on some of the largest financial firms in the United States. Um, and so I give that an A. That is, and then their balance sheet, I mean their financial statements, I give that a B plus, which is not bad. And finally, let's watch a video. This is the last video we're gonna watch, and it's from T1 Energy, and it's the CEO, just talking about his experience, what he's done, and a little bit more about the industry. So, if I can play that.
Hey, good afternoon, everybody. So, let's get right into it. I think I'm really excited to have this conversation because I am really excited to do what I think is going to be a little bit of myth busting, right? And so I think we've probably all heard some version of this narrative that this is a bad time to be in clean energy manufacturing and that this is a very tough time to be in solar. It seems like perhaps, though, your experience in Texas rebuts both of those claims.
Yes, and good afternoon, everyone. I've did oil and gas my entire life, from like my entire professional career. So I guess I'm used to getting yelled at, or used to being told that I'm, the reasons of evil and the reasons of this and that. But when I pivoted into, as you say, renewable energy, I keep thinking to myself, this is not renewable. It's just energy. So I really think that we've done a disservice to solar, maybe even onshore wind, and other energy sources as polarizing or politicizing it. I do think the shaming of, hey, we have to be sustainable, we have to do zero carbon, we have to do net zero, all of that is great and it's awesome, but I think it misses the point that solar, in particular solar and storage, can be extraordinarily low cost, extraordinarily scalable, and complement the grid in many different ways. So I think that's a key thing. For us, when we moved to Texas, we acquired assets that were in the United States. We finished construction of those assets. We commissioned those assets. And we now have a 5-gigawatt solar module plant in South Dallas that employs over 1,200 people, has a payroll of over $100 million. That was a building. It was a warehouse before. So we're creating these jobs. We're creating advanced manufacturing. Texas was very open to that. Texas has been a great, in terms of how they attract energy companies. And for us, as phase 2 of it, we're building a 5-gigawatt solar cell plant, and that'll be north of Austin. But all of this ties back to, Texas has been like the bastion of energy for so long. In my entire oil and gas career, from Houston to Dallas to everything to West Texas, always involved that arc. So it was very natural for me to come back to that with solar.
What is it about the sort of Texas, is it the culture? Is it the regulatory circumstances? What is it that made you, when you wanted to move into that second factory, was there ever any doubt that it would be in Texas? And if not, why not?
I'm a native New Yorker, love New York, but Texas just had this draw always of energy and building and risk-taking and bigger. And tacos. So for me, that was an attraction. It was during COVID that there was a lot of movement towards Texas, and then between the Joe Rogans moving there or the Elon Musk's moving there, it was like this flood of people going in. Yeah. And in my mind, it was like when Tesla's moving and SpaceX is moving to Austin, there's just going to be so many derivative effects in Texas. I saw that as an interesting opportunity, and it turned out that way. Austin's a build culture. It's historically an old semiconductor culture. It is the seat of government in Texas, but has a good university network. It has a good Dell network, and all of that now in the space for new manufacturing, new building was a great place to draw from either capital markets from New York or from tech markets in San Francisco. So I think that was key parts. And now when you're in Austin, you basically say someone, where are you from? Because most people aren't, and you find those unicorns that are born there. Or you're like, what are you working on? Yeah. And that randomness of what are you working on? A time clock forever, this thing here. It's just, it has that buzz right now for this moment in time.
Yeah, absolutely. We hear so much about the potential for new projects to put steel into the ground. I think on your second facility, aren't you about to literally put steel into the ground? And can you tell us about that?
Sure. So our second facility, which again, we have the solar modules, and as a key input into that is the solar cells. We're building that in Rockdale, Texas, in Milan County, about an hour north of Austin, and foundations up, or down rather, and we'll be looking to do steel this quarter. We've publicly announced that we're looking to finish financial close also this quarter. We raised certain amounts of capital last 2 weeks ago in order to continue that build, and things are still tracking to be started production by the end of the year. So that is a new construction. It's a greenfield. The site is an old Alcoa facility that used to employ thousands of people and had a lot of extra power. A lot of that power was found by, as to a lot of things in Texas multiple years ago, Bitcoin miners. That power now we'll be using for manufacturing, and we'll be supplying those solar cells up to Dallas for a solar module. As input to the solar cells, we're buying our solar wafers and our polysilicon from Hemlock Semiconductor and Corning. So we are kind of creating that final chain of like Michigan-based polysilicon and wafers to Texas-based cells and modules. And I think it's an important part to build that entire supply chain in the United States for a polysilicon-based solar, which is the most efficient form of solar.
And so you're building a completely, it sounds like, domestic supply chain for this?
The core components will be domestic supply chain. There's other aspects of glass or glues that there's just so many Southeast Asian supply chains, but we're working as fast as we can to make them domestic. But also we want to make sure that the developers and the users of our product are cost competitive. So we're very, very tough with US suppliers as well. One of our US suppliers is Nextpower. They do steel frames, and they'll be making those frames in the United States and in Texas. So sourcing those frames versus Asian frames makes a lot of sense from logistics, but has to make sense on a cost basis too. We're looking at solar glass, looking at other encapsulants and glues, but like simple examples are like just certain adhesives and glues. They could be made in the United States. They just haven't been because we lost a lot of that manufacturing base to other parts of the world. On this point, I think it begs the question, can the US compete? I think the answer is there, a resounding yes. And one of the reasons in solar it can compete is fundamentally solar is about a conversion of silica and polysilicon through a silicon chain of machines into glass, silica, again. So you're fundamentally doing a conversion process of silicon. And that conversion process primarily as an input, apart from the machines, but more in an operating cash perspective, is about energy, specialty gases, fresh water, wastewater. So when you look at those things, the US can be very competitive, and in particular Texas can be extremely competitive, particularly with specialty gases, natural gas, or water or power. So that's a big advantage. I think the things that America needs to do better at is the non-OPEX part, but the capital part. The capital part, we're still slow compared to the rest of the world. Maybe not to Europe, probably faster in Europe, but the rest of the world, we're
low bar, but
we're still slow. And some of that gets rooted in code. I'm not saying we do anything that would ever harm anyone or the environment or create risks for that, but there's just so many ways to do and build that can be safe and that can be faster. It's all about speed to market, speed to power, and we have to do that.
Texas strikes me, and well, is clearly not only a good place and an attractive place to build, but it of course is a place to deploy solar and basically, almost any other energy technology as well. What do you see as the sort of biggest growth areas for solar deployment in Texas? Whether it's grid connected or perhaps co-located with different types of facilities.
Yeah, there's this expression which I don't want to say it's cliched, but there's an hour of sunshine in Texas can power the world for a day. That's a tremendous amount of potential energy. Now, of course, we need to capture that energy. We need to store it through time, temporally with batteries. And that's an important factor because it is there. We actually named T1 Energy, which stands for Type 1 Civilization, which gets most of its energy from its nearest star and stores it for later use. So it's a hat tip to that whole concept.
Oh, that's interesting. I did not know that.
It's not Terminal 1. But from the use of energy there, if you look at world maps for solar irradiation and you look at those things, you'll see that there's certain places on Earth that have better weather patterns, both further away from maybe like Houston's a little bit more towards the water, more cloud cover. But you have West Texas all the way through Arizona, Nevada, California, phenomenal irradiation, very, very, very high potential. Texas is unique, and while we only do solar and we do not do wind, onshore wind has this other corridor straight down the center of the United States. When you look at West Texas in particular, that is a overlap that doesn't really exist in most places on Earth. Most places on Earth that could be industrialized.
Yep.
So when you look at West Texas, what's happened, you have both forms of that energy, which provide almost zero marginal cost. Wind tends to be more in the evenings or nights, and solar more in the days. And you can go through West Texas and get extraordinarily low prices. We're already seeing that with the Permian in West Texas, where there's 7 to 8 gigawatts of power that's used in order to electrify pumps, in order to get more gas and oil out of the ground. And now you're seeing more and more of those pumps are rather than diesel, and just save the diesel and use the electricity there. You've seen it in West Texas with Bitcoin mining from a few years ago. There were locations where you have CREZ lines, which were done in the mid 2000s in Texas. Those CREZ lines were built to haul a lot of that power to Dallas, Austin, Houston. When you have intersections of those CREZ lines, you have tremendous amounts of power that's going to be 90% plus solar wind, extraordinarily low cost. So when you couple that ecosystem, and granted that most of the industry is not in West Texas, you really create a potential for what should be there: steel, aluminum, fertilizer. In theory, you could have desalination, run desalination plants. Even if you don't run them 24/7, just running them a day, you have a zero marginal cost of desal, coupled with hydrogen production or fertilizer production. You can start getting crazy thoughts about terraforming even. When you really get to that zero cost. Now, again, I'm separating the marginal cost of solar versus the capital requirements. Those are still complicated. It's still hard to finance. They'll still require contracts. That still requires work with developers. Developers then have to go to the big hyperscalers or the big utilities. Those utilities and hyperscalers want the lowest PPA prices, and then the banks all want terms and they want long-term commitments. So the CapEx part is still a bottleneck in terms of getting that capital deployed for it. But on a cash operating cost, once these assets are in, they become extraordinarily low cost. And I think that creates some of the natural tensions, particularly in Texas. The grid in Texas was built not because Texas wanted to be the big green state. They are not the big green state in terms of their historical legacy of being the oil and gas state. Yet they've achieved it. They beat California on solar, they beat California on wind, and now they have this tremendous resource for hyperscalers or data centers. And it's all because they allowed risk-taking, they allowed less bureaucracy, they allowed faster build, and they did have natural resources of good solar, good wind, just like they have good oil and good gas.
I'm really glad you mentioned the Permian and oil and gas as well, because certainly, when you're looking at the sort of domestic power sector, there's a level of competition between solar and gas. But as we're sort of the macro picture right now being the war in Iran, and this is of course putting such a spotlight on the U.S. international posture in terms of our oil exports and our natural gas exports. What do you see as the relationship between our ability to continue to use those exports and even grow those exports to provide energy for the rest of the world, to provide us geopolitical leverage? Is there a nexus there between solar power and our ability to continue and even expand those exports?
Well, I think they're very collaborative, and just like the example in the Permian, where solar can support an electrification of pumps in order to produce more. The more solar that's available in Texas or on the U.S. grid, for that matter, that means more molecules can be exported in the form of oil or natural gas. I think that's important. I think it's important to export that. It can, in some ways, export the best America has, or the American exceptionalism around the world.
So there you go. We were able to look at the CEO explaining exactly what their goal is. You can watch the video. I can maybe paste it in the description. But I wanted to point one more thing. When you're buying this company, you're not just buying a solar company. They are actually growing and acquiring companies that are in the solar battery storage industry. So the cool part about this is, so T1 Energy to enter BESS and data center infrastructure market with acquisition of core power. Well, what is core power? Well, let me see. I think they describe it. They describe it here somewhere. Core. Okay. Let's keep reading. It says announces the morning it has entered into a definitive acquisition of core energy and better energy storage system and software solution provided support industrial hyperscale development. The purchase entered will be $32 million with some debt and equity. Closing Q2 of 26. The transaction is expected to provide T1 with an entry point into energy storage and AI data center infrastructure market through an expanded potential customer base for solar and storage solution. So for this company that is creating thousands and thousands of solar panels, well, they have to, let's say they sell it to some company. Well, now they can sell it a package and say, hey, you can buy both our solar panels and or storage solution all at the same time, which is a phenomenal selling potential and upscale for the vertical upscale for the company. So this is an awesome um, and I have some strategy for T1 Energy. So the strategic centerpiece of the acquisition is Core's NRI division, which is focused on designing, developing, installing, and operating utility scale energy storage solution. This NRI team has deployed about 1100 BESS better energy storage systems projects worldwide and has provided solutions to the United States government, national lab, utilities, developers, and other industrial customers over 50 years. So that brings in a lot of experience that they may not have. NRI performs all its software control development domestically. T1 plans to rebrand Core Power as T1 NRI following the expected closure of that transaction. This market is expected to expand. This type of better energy storage solution is going to be expanding as AI demand continues to grow, according to Risted Energy. Saying install base of 45 gigawatt hours of utility scale energy, 144 gigawatt by 143 gigawatt hours and by 2035. So when you buy T1 Energy, you're not only buying a solar company, you're buying a company that's kind of like branding itself as a company that's gonna continue to grow in the industry for solar panel manufacturing as well as energy storage solutions. So B-Run, I think B-Run, no, not B-Run, Sun, whoops, not Save. I think it's called Sun Run. Yeah, Run. This company is up because of they did something which I think there's a potential for T1 Energy to do, is that this solar stock is surging because they made a deal with Tesla. Elon, I guess not Tesla, to be able to do solar energy with Tesla. So essentially, June 2024, Sunrun provider of home battery. Oh, come on, I can't read the article. Says Sunrun provide home battery storage is working with Tesla to meet the energy needs for AI data centers. Shares of the company is running because essentially they are the home solar panel and battery storage provider. As investors consider companies' ability to play a more substantial role in expensive artificial intelligence build out. Wow, that's very, very biased, saying like it's expensive artificial intelligence bias. So obviously when the news came out, the stock just exploded to the upside, and it looks like I see that T1 Energy kind of maybe getting into that type of relationship, and as well as being very United States centered, which I think is a good proxy to see where B1 Energy can go. So this company, once again, not that big, pretty small, $3.44 billion market cap. Year to date, their stock has done well, 134%, and it's seen some dumps. And when Trump kind of took office, he kind of nuked the whole solar energy industry. So it's going to be a very big uphill battle. So solar overall has I guess is the lowest it can be, just because of what Trump decided to do, and so I think from here all it can do is kind of go up. There is I don't know where it is, but you are able to see like where the where the sectors are going and which bubbles view. Let's see. Let me see if I can show you what I'm trying to show you here. Energy storage bubble sector. If we look at sector energy, as you can see, like energy is kind of beat up. It's almost all in the red, especially the bigger companies, and so they're almost at the bottom. And from here, I mean, they can hopefully all they can do is kind of go up, but it is really so. Let me not belabor onto unnecessary stuff, but my thesis, if this company definitely has potential. Obviously, I have some shares. I may be a little biased because I own some of the shares, but yeah, I would, if I was you, I would do some research on the company, see what the heck they're all about, and go even deeper. But this is a very interesting company to look at. That is all I got for today. Later, another day, I'm gonna talk about maybe more software companies, because software companies are getting beat up, and it is definitely an interesting situation. A lot of the industry thinks software is not going to be replaced by AI. So therefore, a lot of the software companies are getting beat up significantly here. Um, and so maybe there's some opportunities there which I will cover next week or maybe tomorrow. But yeah, that's all I got for today. Thank you so much for joining me. If you like this video, make sure you subscribe. I know it's long, but if you got through it, thank you so much. With that said, this is financial education and business out. Peace. Have a great